I think still learn what everybody else is doing, because that kind of gives you some context anyway to start from.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders podcast.
So this is part 2 of this episode for the Two Traders podcast. If you haven't listened to episode 1, please go back and listen to that, because that's critical before you jump into part 2 here. This is what you're going to hear in part 2. You're going to hear about the crazy hedge fund that made winning traders out of losers and how exactly they did this. You'll also see what is the most important thing that you should pay attention to when you're looking at other traders. You'll learn why the institutions are now hiring a different type of prop trader. You'll also see where traders get their best ideas from and how you can tap into this also. And you'll learn about the crazy and bizarre rainforest meeting that led to a new idea. And finally, you'll see which gambling game is probably most fruitful for traders to pay attention to. All this and more in this episode of the Two Traders podcast. Yeah, that's interesting. The closest thing I suppose I've heard to that was a fund that a friend of mine was running. And what he did was he brought in beginner traders. They weren't really necessarily vetted or anything like that. And they were given demo accounts to trade. But what they didn't know is they were actual accounts. And the system reversed their trades. So every loser that they had, where they let the loser run, was a big fat winner. And every winner was, of course, a little loser, because they would cut those really quick. But what they did was interesting beyond that was that, and by the way, the biggest difficulty they had with these were they were told that they were trying to qualify to trade real money. They didn't know that they were trading real money in demo, right? Because it looked like demo to them. But the biggest issue they had was they were trying to convince their biggest losers to continue onward and trying to pump them up and tell them, no, you can do it. We have faith in you. And that sort of thing, because they didn't want to lose, their biggest losers. And so, but what they did was interesting in terms of what you were just discussing. They had, I think it was a 10 and a 20 moving average. And they would keep track of their profits and loss. And essentially, when the moving averages crossed, they would change the position size. So they didn't really have control over position size. Again, they thought that they did in the demo, but they didn't. So all this was done in the back end. And what would happen is if they had a real string of losers in a row, which of course meant winners for the fund, then what happened was they started to reduce the position size. And when they had a string of losers, which of course were winners to them, then they would increase it. So, and that was all just based on 2 simple moving averages. That's the only thing I've ever heard of that kind of comes close to that. And he was really big on, let's focus in on the trader. We're going to do our technical analysis on the trader instead of the charts. That's really what he was working on. But again, like I said, it was really funny to me that they had these poor traders that they had to just they had them on the phone all the time. They know you can do it. Keep with it. We have faith in you, because of course they were making money off these guys. I just thought it was some sort of sick, it's like a movie. It's like a movie, really. Yeah.
That's definitely some original thinking there. It's like a psychology strategy, isn't it? And I wonder where those traders are now. They're probably all really successful now.
Yeah, and that's the thing. He lamented that whenever they upgraded a trader from demo to real, that's when they would just fall apart. So they would actually reverse it, and whenever the trader took a sell, it was a sell in the back end and so forth. So it correlated with the platform. And whenever they did that, whenever they graduated someone to become a real trader, that's when they just totally fell apart at the seams. And he just lamented the fact that kept happening, and he concentrated all of his focus was basically on the qualifiers. Yeah. Anyway, so Darren, this idea that the reason why we were able to discover the size of the universe is because there was some original thought, because the people were basically breaking the rules, right? And so how do we encourage that in our trading? Is it just don't read any trading books? Is it to work on your creativity? Is it to create some random system? Like picking up different Lego pieces. I'll use this exit, I'll use this entry, and then I'll use this sort of gut feel. Or how do we encourage this?
Yeah, so I mean, I think still learn what everybody else is doing, because, that kind of gives you some context anyway to start from. I think more than anything, it like you said, it's like a personal thing. And I think, just be brave enough to kind of believe in your own ideas as well, and don't think that it's something. So I think we kind of have it kind of up there on a pedestal, like it's this really high intelligence thing, and we couldn't possibly have an original thought that hasn't already been thought of by these great traders and these mathematicians and these amazing minds. And sometimes the idea can be something very simple, but that just works for you. I mean, you could be trading a very simple, support and resistance trend line type strategy, but you might just have, your own little idea about how you manage the trades or how you do your position sizing, something a little bit different, and just really be brave enough and have a bit of courage to try some things. And the thing is, we're in a great scenario where, we can try these things without having to risk any money, really. It's just a case of giving stuff some time and trying stuff out.
Exactly. So I think part of the question comes from what you touched on earlier, which is people are concerned that all of these traders in these big funds and banks, they're all coming from Ivy League schools or whatever. And so the idea is, I'm not at that level, I'm not sophisticated enough. And the real answer here is you don't have to be. You'd be shocked at how some funds approach things and how simplistic it really is in the end. And so my question for you is, I got my own ideas, but my question for you is, if it really is that simple, then why do the funds and banks feel it necessary to hire people who have these degrees from Ivy League schools and presumably the smartest men in the room? Why is that so important to them?
Well, I'm not 100% sure that that's purely where they're getting their best traders from anymore. And I think if you applied from university to, a hedge fund or a bank and wanted to be a trader, I imagine that they'd be looking at, what interests you had outside of trading and what sort of things, you did for fun. And I think that they'd be looking more at those now rather than just, the straight A, first in his class sort of student. I know if I had a fund and I was going to hire someone, those are the sort of questions I'd be asking.
Yeah, I think you're onto something. I know James, our friend James from the forum, he was talking about how all these they did all these background checks on him and everything like that. It sounded like they're more interested in whether or not he was a criminal than whether he came from good stock. But I thought that was funny. And the same thing with Colin. Colin is in Canada, and he's worked for a few now funds, and I think their main concern was just his track record. So it depends on the fund. My theory is that the reason why these funds, when they do advertise for open positions and they say, we want someone from an Ivy League school and this and that, I just think it's really more about keeping the good old boys in the game. I don't think it's anything more than the old in-group, out-group, which is an old psychology tenet that we know about, right? Clicks and that sort of thing. So I think it's just more of that than anything. Anyone can learn to trade. Let's face it. It's just about adapting and adopting the right approach so that you stick with it. And I don't think that has anything to do with qualifications or anything like that at all. So yeah, I'm with you on that one. And I would also say, try and look out for parallels. I'm always trying to pull things in from other ideas from other fields and see how does that apply to my trading, or how does that apply to something else. So for example, in biology. So two friends of mine, biologists, were down in Central America, right? And they came up with this idea based on the genetics and how the genetics work in nature. They came up with this idea for creating kind of like a marketing system or a customer relations system based on how our genes get transferred. And so what ended up happening is by using that approach, instead of using the same customer management software that everyone else was using, they had this really unique one that was adopted by eBay and Amazon and all these big retailers because it made a lot of sense. And it was simply taking an idea from biology and bringing it into marketing software, and these are the sorts of things that I think people can really make some headway on. When you are thinking about your trading, don't just restrict it to trading. Look at other fields. Look at other things. What do they do in psychology? What do they do in historically? Like, for example, you can look at history and see what are some of the, this is an easy one, but what are some of the signs of a debt bubble? Or if you're looking at something in biology, what are the signs of change, right? How do you change things? How do you create habits? So you can find that out in psychology and apply those good habits to your trading. These are all things that we can pull from other fields, and it's not necessarily from opening up the latest Van Tharp book or whatever. So I think that's definitely something that I would do.
I do that more and more now. I look at trading or other traders and what they're doing. Even really successful traders, I've stopped looking at what they're doing. The one I look at now is successful poker players. They're the ones that really fascinate me. How they seem to be consistently winning regardless of the cards that they're dealt, because you can't always get good cards if you're a poker player. But the really good guys, they're consistent. They know when to sort of close it up when, if they've had a good run and they're giving it back, they seem to know just the right time to call it a day. And, they seem to know when to really run with it and bet heavily. And really they've got nothing to go on there really other than experience and feeling and understanding the uncertainty of the situation they're in. Obviously, they've got the psychology of the room as well that they're in, just like pit traders used to have. But a lot of these guys are trading online, and all they've got to go on really is what the outcome was and how that the other players betted when that was the outcome. And I'm really sort of kind of sinking in with that with my trading. I'm thinking, really making my decision on, what's happened, what the outcome was, and then using feel and experience when I'm making my, my decisions to manage my trades. Obviously, I've got a structure to that. It's not completely wild and I'm making it up as I go along. I have kind of like, A, B, or C as an option. But I'm just kind of, trusting in that feel element a bit more. So yeah, the poker's the one that's fascinating me. But I don't play it. I've played poker once or twice for fun with mates. I don't play online. I don't know a lot about poker at all. It's just those kind of parallels with the sort of psychology of being a successful poker player and trading.
Yeah, that's a really good point. We could probably even spend a whole topic on that. A whole episode on that. I think there was a book I read about one of those guys who actually made the transition from poker into trading, and I'll see if I can post that one under the show notes here for everyone. But it's a really good analogy, because what you're saying is so true, isn't it? Where sometimes you get dealt a hand, which is essentially a trade, a market that you're in, and it's not really the best one. So what do you do, and what kind of tools do you use to pull out the best result out of that, or presumably is the best thing you can get out of that sort of situation? It's a great analogy.
Yeah, and also, the context of it as well, I mean, if you've gone into a trade and it hasn't really worked out like you thought it was going to, but you're still in it, if you're 500 pips up for the month, then you might say, well, in this context, price action isn't great, but, I'm going to go with it. So, I think you need to read the context of how you're trading and what the market's doing, and just kind of use that slightly in your decision making.
Great. Well, thanks for your time, Darren. I really appreciate it. This was a great session, and I'll look forward to next time.
Okay, Walter.